Here we go again, your trend update for the end of January, more or less. Let's take a look at some interesting developments here in financial markets. A couple of changes are actually happening, but as you know, on our weekly time frame, this is all pretty slow, and we don't want to rush into anything or speed up anything before the market is actually getting there. This is always the big danger, getting too greedy or waiting too long. Therefore, we have our trading signals and we only follow the system. We actually don't know anything about what a market is going to do, if a stock or a currency or gold or silver is really rising. We only have a system. We know the system well. We've back tested the system well, and so we follow it. And right here, we're looking at the DAX. And what we can observe that this week actually broke out to the upside. We have a fractal taken here and we are long this market even though it is now closing below our entry, and we are taking a loss into the next week, still holding on to the position though. On the monthly time frame, we have all the reason to be long in this market. We have momentum, gaining speed, and the market is on the upside of the alligator of the balance zone, which means it will probably continue to rise, at least from a typically trend following perspective. Again, we are not interpreting, we are not guessing or predicting, we're only following. And when the market makes a new high, we buy. That's it for the DAX, all you need to know. A little bit scary actually, it's getting in the S&P. When we take a look at the development, this is not the S&P I'm looking for. When we take a look at the development again this week, look at how insanely much we are trading away from this balance zone. When you draw a line at where the price is moving and where the balance zone is moving, you can see that there's a big angulation between that. You don't have a parallel market moving to the moving averages, but what you have is a moving away from the balance where it actually wants to be. So remember that the place where the moving averages are is always the place where the market wants to be. If there was no new incoming information, if there was no real change happening in the marketplace, then the market wouldn't trend, it wouldn't go up, it wouldn't go down, it would simply more or less stay where it is. You would still have some selling and buying going on, but the market pretty much remains where it is, so it would be trading on top of the balance zone like you can see in here. Not really anything happening, the moving averages are intertwining and market can't decide if it wants to go up or down. This is the exact opposite. What you get is a parabolic movement away from the moving averages. And let's take a look in here at the monthly chart to see how insane this has become. We are not going, just so we are clear on this, we're not complaining about the market movement. We're not happy about the market movement either. We are especially not euphoric or even greedy about what is going on. You could get greedy. It's very easy to get greedy at this point when the market is moving like this, and as you watch the market move day by day or week by week, it's very tough after developments of like this here in the past 6 months. It's very tough to actually calm down again when the market starts to slow down, when the market starts to breathe a little bit. It doesn't mean the trend is over, but it means that the market phases are always changing, and the market phase we're currently in is absolutely insane. It has never been seen before in the S&P 500, and we're not even looking at the Dow or something. It's even crazier there. You can see momentum at its high. When we really zoom out and we look at all the data that we get here in the S&P, that's 1981 all the way here in the front, 1981, and now we're here in 2018. Just look at the nature of the market movements. You can see how this trend is by far not as big as what is happening currently. Now, we are not looking at a log chart. Let's take this into perspective. We are looking at a log chart right here. You can now see that the proportion of the movement from the early 80s into the 2000s is a much more bigger portion in relation to each other than what we see right here now. But the momentum is at its high, and paying attention to the angulation, or how far we are away from the moving averages up here, it actually takes quite the keen eye and quite a lot of time, if you really want to be exact about it, to find a second time where the market has been this parabolic. If you look into this kind of movement here from 95 to 2000, you don't have a parabolic movement or moving away like you see it in 2018 here, right at the start of the year. Here, not even here, I guess from the perspective of simply looking at it by the pure eye, it looks like we are as parabolic as we are right now in 2018, right here on the monthly chart. Never been this far away, never been this bullish, never been this much momentum in this move going in this direction. As I already said, we are at an absolute momentum high here. So God knows what's going to happen. God knows what's going to happen. Nobody knows. The only thing, the only chance you have to survive in any market phase, but especially in a market phase like this, and I think you can't stress this enough, that people speculate and people talk about and people want to know when is this going to go, where and how long is it going to stay there or whatever. Nobody knows. There is no way of knowing. And therefore, all discussion and all reading and all information about the market that you get online or with your friends or whatever is completely useless. All you can do is follow the price. Nobody in the year 2017 would have expected the S&P and the American indices to rise like this. Nobody would have known that the end of January is going to look like this, a parabolic movement away from the balance zone. It's not even being shaken out. It's not even like the market drops back into the balance zone and then bounces off of it. It just keeps on moving higher. Therefore, we are holding on to the position. You have the entries marked here. We have been long since 2016, November 2016. We have 3 entries, and we are holding. We're just holding. We haven't done anything ever since this entry here has been triggered in the middle of 2017, and it's been half a year that we've not touched this market. We're just letting our positions run. We're letting it go. We're happy about whatever we see, but we also know that this is, well, it's not unnatural because the market is doing it, right? So it's natural. Any earthquake, any tsunami, any whatever happens in nature is always natural because it happens, you know, and therefore it's true. Therefore, it's a reality. If you believe it or not, it doesn't really matter. You can either adapt to it or you can complain about it. We like to adapt to it, you know, because we make money. And here we are just adapting as well. But we're not going to be surprised if this is going to drop back down next week and lose, like, you know, I don't know, 5% and 10%. Who knows? Who knows? The next market crash is going to come. The next bear market is going to come. The next side movement is going to come. But nobody knows when, where, and how. That's pretty much the important information that you have to have here. While you can be happy about this movement in the S&P, you really got to watch out that you not get euphoric, that you not get too greedy, and this leading to the fact that you don't know when and where to get out. And that's very, very important. This doesn't help you at all. This kind of movement doesn't help you at all if you're not able to know where to get out and be able to get out and then be able to accept that you won't have a market that is moving like this. You won't have a market that percentage-wise in your account is going to make you all that money that this market makes you or made you in the past 6 months. And this is actually pretty tough on your psyche to accept that it's going to be slow again, that you need new trends to unfold. It takes a long time again. It's very, very difficult psychologically to handle these different market phases, and it's also very, very difficult to apply all your rules while these market phases are going on and as they are changing, simply seeing a clear picture and only trading your system and not being caught up in the emotion of greed or in the emotion of fear and not being able to execute your rules anymore. And this is probably the most important part that you can mention at this point, as the S&P is rising like this. We have the Nikkei index that we want to look at the next market for the next market, and still hasn't changed in my opinion, even though the last 3 weeks have been slow. I don't see anything that would get me out of this trend, of this uptrend. Trading above this red line here simply means overall we are staying above the massive resistance this market saw for 30 years as we were trading in this base here. This is a log chart as well now, and we are staying above the resistance, and hopefully we'll close out the month here, and momentum gaining speed. And even if you get a week like you do here, or weeks that you get here, we are above the balance zone, we are above the moving averages, momentum is on our side, we're staying long. That's it. We have entries from down here, as I told you, or as I have been telling you for the past year. This fractal right there is a nice add-on opportunity. You're barely in profit here, but remember, weekly trading takes a lot of time. It takes time to let the market unfold. And it's good that it takes so much time, because people don't have that time, so they will do some crap in between, which makes guys like me a lot of money. So therefore, let's stick to the position, even though it doesn't really feel nice here at the end of this week, closing like this, like this little hammer hanging there. Who knows if this is going to drop back down to the green line before it bounces out again? Nobody knows. And the character of the trend cannot be known. It cannot be known. But still staying long in this guy. Let's take a look at some Euro FX pairs. We have the Euro Yen. Not happy with the Euro Yen with this week. We have entries marked again here, and the bull market actually bounced off the balance zone with this candle here 3 weeks ago. But ever since then, Euro Yen didn't get any momentum going. If you have a lot of add-on positions going in this market, you want to be sure to have your risk in place and to have your stop in place. For those three positions, my stop is right below this fractal here to protect the profits, even though the third entry is a little bit at a loss right now, but these two are going to compensate for that easily. So just letting it run. Whenever the stop gets hit, I'm gonna get out. But right here, with not a lot of momentum getting going, my very bullish view is it's starting to shake a little bit. Okay, so we're always going with market reality. When nothing is happening, then we are not getting euphoric, or we're just going with the flow. We're really just going with the flow. It's probably the best way to describe what's going on here. US dollar yen, interesting. We have a new development going. Talking about this last week as well. What's interesting here is this is a monthly side movement, which means market has not picked a direction. Are we going up? Are we going down? Don't really know at this point. A break of this fractal that is marked with that black line here has been taken, but it failed. Before this short was taken by this candle here, we went short, it also failed. So two losses right there. Now with the market dropping down again, we have a new sell order in place below this fractal here. And who knows if this is going to work or not. We are following the market, and this is exactly what you can see in here. You have this is the monthly chart now, and you have your overall sideways movement, and the market is going to break that to the upside or to the downside. And all we are doing is we want to be there, and we want to take advantage of whatever move is going to happen. And that simply means we have to take any entry the market is offering us, because we don't know when it's going to start to go. And taking small losses is just part of this trend philosophy, because the trend, once you are in a trend, is going to make up way more than what you lose on small risk in these kind of side movements when the market doesn't get going and you get whipsawed 2 or 3 times in a row. Euro dollar, this is the monthly chart, is up. Can you see that? It's going up. Nothing more to say. We are above the balance zone. We have a momentum on the plus side as well, and we're just going upwards. Weekly, very interesting. I think not a lot of people expected this, and well, I never expect anything, as you know from what I'm talking about always, so I just bought this, but still I don't like this small correction. I don't like that we haven't seen the area below the zero line in the momentum, which would be a major correction being signified. This is only a smaller correction. I don't really like it. Usually when you see something like this, the market is coming out and then dropping back down to make that bigger correction before you really get a move going to the upside, which would on the monthly chart mean that before this fractal gets taken, you get a drop back down into this balance zone, then the fractal forms, and then you take it long. This here is a smaller type of correction, which did not reach the important support levels marked by the moving average lines down here. However, we don't think about the market. We only think with the market, and when the market makes a new high, we go long. And this is what happened here. At the end of this week, we are in profit. I still don't like this long. That's maybe also something important to mention once in a while. I don't like being long in this market, but the system is telling me to do it. Since I am only a stupid human and I can only follow the flow of the market and the reality of the market, it's I just have to find a way to deal with it when the market does something that doesn't fit the theory. And whatever way that is, I'm staying long and I'm protecting my position below this fractal here with a stop. For now, it seems to work out, but we are not going to be surprised if this is going to drop down. Euro Swiss franc, really quick, it dropped back into the balance zone. It's probably making or giving us a new fractal inside the balance zone, which is a new stop for us. We have this entry and this entry going. Let's see how far or how deep down this correction will go before it starts to head out again to the upside. How much it has to go to the upside, I don't know. But it doesn't really look like we have a whole lot of a divergence. This doesn't really make the impression of a trend ending kind of price setup here. I'm guessing we will get that fractal first before it drops down. If it drops down, maybe it continues to the upside. I don't know. We'll just pull the stop tight behind the market here. For the end of this week's video, we are looking at some interesting developments in gold and in silver as well. Again, just like in the US dollar yen, we see breakouts happening and they all failed in this area. We lost money in this area. Now the market is coming back up again and is actually approaching this 1390 area. This 1360 area has already been taken, and I have already bought into this, and I'm long already here. Could be a turnaround of the whole correction that was going on here. Remember, we have this uptrend and it is being corrected. The correction will stay below the balance zone, and on the monthly chart this will be below the moving averages. At one point or at some point this is going to turn around and give you an upside fractal which you can buy as the market has turned and as the market is going to unfold a movement into the new direction. And it will show you that by breaking this first fractal that it makes to the other side. Here you have multiple fractals because we are on the smaller time frame. If you were to look at the monthly, you could really see this one fractal. After correcting for all of this time but not going lower than we previously went, we have now all the reason to buy this. It should be clearer when we take a look at the monthly now. Correction below the moving averages. First move across the moving average, giving us the fractal. A long time to correct, but not going lower at this point than we were here. And now we're probably breaking out. Or if we break out now, then we have to buy this as the trend follower. It doesn't matter what we think. It doesn't matter if we like it or not. Just like in the euro dollar, we just buy it. And as we buy it, hopefully the market is going to unfold and go much higher, so we can add on into this trend. If this were to break out here successfully, I'm assuming that it really has some way to go after all of this correction. I'm guessing we see new highs in gold. And same is true for silver. Exact same scenario. Uptrend, correction below the balance zone very clearly. First fractal here after we crossed the balance zone. Now correcting, not making a new low below here. Actually, we have a really nice bounce with this huge wig from the low area. And if this market is strong enough now to come across or to break these two fractals here, and then even this one at 2150 or 21 area, then this is gonna take a nice, or could be a nice move, taking prices higher in silver. So these are some new developments that I'm seeing. Holding on to longs in indices, not being too bullish anymore in euro yen. We will see about euro dollar, euro Swiss franc, holding Nikkeis and silver and gold getting going, and of course shorting US dollar yen for that matter. These are the developments. Let's see if some market shifts are happening. I already announced it a little bit last week with the massive parabolic movement never seen before in the S&P. We will see what 2018 will bring, if there is any interesting stuff happening. Remember, if you are able to keep out the emotion of your investing or trading, you will always see the clear picture of what the rules or your rules are telling you. And in order, or when you follow that, your rules, then you will always be on the right side of the market. It doesn't mean that you are able to get out at the top and get in at the bottom, or the other way around for short. But it means that you will always get the big chunk of the move and you'll never miss a move. And long term, if you have that time, this is going to change your life. Okay, this is not just making a living. This is actually changing your life when it comes to money. And I think that's over a period of, I don't know, 25 years, that is really quite a thing to look out for and to look forward to, actually. All right, that's it for this week. Post again your comments. Very happy to read your comments and to respond. And we'll see you soon. Bye bye.